Hello friends, welcome back to your favorite channel, your destination for deep insights into India's financial, stock market and policy updates. Today, we have a very important development from the Reserve Bank of India, RBI, one that could reshape how digital banking works in our country. RBI has proposed a new framework, a draft circular that aims to regulate the digital channels used by banks. It comes with stricter rules on third-party products, fraud management, customer consent, and even on how banks launch their digital services. So what are these changes? Why is RBI doing this now? And most importantly, what does this mean for common users like you and me? Stay with us till the end, because this script will break down every clause, every implication, and what this means for the future of Indian banking. Let's get started. Point number 1. Why this matters. Over the last decade, India has seen an explosion in digital banking, thanks to UPI, net banking, mobile apps, and fintech services. Banks are now digital first, offering everything from mutual funds, insurance, to shopping deals right inside their mobile apps. But this convenience has a dark side too. Many banks started pushing third-party products, like insurance from related companies or mutual funds of partner AMCs, directly through their apps. Some even prioritized selling those products instead of their core services. And sometimes, this led to confusion, mis-selling, or even fraud. RBI has clearly taken notice. And now, it wants to bring in rules that protect customers, ensure transparency, and reduce risk. Now point number 2, RBI's big ban, no more third-party product ads in banking apps. Let's first talk about the most controversial part of this draft circular. RBI says, banks should not display third-party products or services on digital banking channels. Yes, you heard that right. This includes products from 1. Promoter groups, 2. Bank-owned subsidiaries or joint ventures, 3. Or any associate company. That means your bank's mobile app or website cannot promote life insurance, health policies, mutual funds, or shopping deals from group companies, unless specifically allowed by RBI. Let me explain with a real-world example. Let's say you're using the HDFC Bank mobile app. Earlier, you might have seen offers for HDFC Life Insurance or HDFC Ergo Health Cover on the app's home screen. With this new rule, RBI is saying, no. Unless we approve it, stop showing those third-party products inside banking apps. This is to make sure banking apps are focused on banking and not marketing. Friends, hope you all understood this simple example. Now third point, RBI is concerned with misuse of digital channels. But why is RBI going this far? Because the lines between banking and selling are blurring. Banks have been aggressively cross-selling products that aren't core to banking. And the concern is, many customers don't know if these products are being pushed because they're good or because they're profitable for the bank. For example, 1. A bank might show a pop-up for an insurance plan. 2. The customer, thinking it's necessary for opening the account, clicks yes. 3. But in reality, they've bought something they never needed. So RBI wants to protect customers from these marketing tricks and hidden nudges. Point 5. Risk-based monitoring. Banks must monitor unusual transactions. Another major update in the draft guidelines is around risk monitoring and fraud detection. RBI says that all banks must have a risk-based surveillance mechanism. What does that mean? It means 1. Banks must study transaction behavior of each customer. 2. They should flag or monitor unusual transactions, like sudden large transfers or frequent high-value activity that's out of pattern. 3. They should even consider taking customer approval before allowing such outlier transactions. Basically, early warning systems must be in place to prevent fraud before it happens. RBI wants banks to go beyond passwords and OTPs and start using AI, pattern recognition, and behavioral analysis to detect frauds proactively. Now sixth point, no forcing customers into digital banking. This next rule is something we all will appreciate. RBI says, banks should not make it mandatory for customers to use digital banking to get other services. So what does this mean? Let's say you want to get a debit card from your bank. They can't say, oh sorry, You can only apply for a card if you activate mobile banking. That's not allowed anymore. RBI is saying let customers choose if they want to use digital channels. Don't force them into it. Also, if a customer opts for digital banking, the bank must record their explicit consent, properly documented. No silent activations. No sneaky opt-ins. This is a huge step for digital rights and customer consent. Point 6. Launching new digital services? Take RBI permission first. Now here's a very interesting rule. RBI says that before any bank launches a new transactional digital service, like 1. Mobile banking, 2. A new UPI wallet, 3. Or an internet banking upgrade, they must take prior approval from RBI. And not just that. They must 1. Submit a board resolution, 2. Prove they have the minimum regulatory net worth, 50 crore rupees or higher, 3. And submit supporting documents to the RBI's regional office. So what's the logic? RBI wants to ensure that only stable, well-managed banks offer transactional digital services. Not everyone can jump into digital just to ride the trend. There must be a strong backbone, financially and technically. This protects the public from fly-by-night operators or half-baked banking apps that could collapse under pressure. Now 7th point, universal mobile access, no network dependency. Here's another important point. RBI says, banks must ensure that mobile banking services should work across all mobile network operators. In simple words, digital banking should not be dependent on Airtel, Jio, or Vodafone. That means, 1. Every Indian, no matter what SIM card they use, should be able to use mobile banking services. 2. It ensures inclusivity and reach, especially in rural areas. This is a big step for digital financial inclusion. Point 8. View-only access for eligible banks. RBI also clarified that banks which have core banking solution (CBAs) and have upgraded their infrastructure to support IPv6 can offer view-only digital services. So what does view-only mean? It means 1. Customers can check balances, 2. View transactions, 3. See account statements, but cannot do any fund transfers or perform transactions. This is helpful for 1. Older users who want info, but don't want to risk making transactions. 2. Banks still building secure systems for transactional services. Now 9th point, RBI is shaping the future of digital banking in India. So let's take a step back. This draft circular by RBI isn't just about a few rules. It's a massive shift in how digital banking will work going forward. Here's the summary. 1. Crossmark no third-party product ads on bank apps. 2. Left-pointing magnifying glass stronger fraud detection using behavioral patterns. 3. White heavy checkmark explicit customer consent for digital services. 4. No mobile phone sign no forcing users into digital banking. 5. Stop sign RBI approval needed for new digital products. 6. Globe with Meridian's inclusive access regardless of mobile network. 7. Closed lock with key focus on customer safety and trust. RBI is saying loud and clear. Banking must be safe, transparent, and customer first. Now point 10th, what you should do as a customer. So what can you do? 1. Don't fall for pop-up offers or bundled insurance without understanding. 2. Always ask questions before clicking accept on a banking app. 3. Check if your bank is following RBI's digital norms, especially around consent. 4. And if your bank is pushing unwanted products, give feedback or raise a complaint. RBI has opened the draft for public comments till 11th August 2025. So if you have suggestions, send them in. So friends, that's a deep dive into RBI's new digital banking guidelines. This draft is a bold move, one that puts consumer rights and digital trust front and center. We'll keep track of how this evolves, and once the final rules are published, we'll bring you another detailed video. If you found this video useful, do give it a like, share it with your friends, and subscribe for more such financial insights in simple language. Thanks for watching.